Yeah, we don't do budgets. I hate, it's banned. The word budget is banned from my team.
But how is that possible? You don't do budgets?
Well, I mean, you plan. This is my point. It's like, it's an attitude, it's a mentality. You have to plan. You can't do budget and you can't plan forever, right?
Yeah.
To be effective, you got to do three things. You got to plan, you got to execute, and you got to hold people accountable to that execution, right? And planning needs to be the smallest part and needs to be flexible enough because it's the execution and the iteration. Like in the same way you do, like people do and apply those principles to things like, product development.
Yeah.
Right? Why wouldn't you apply to capital allocation?
Is this thing on?
Yesterday's price is not today's price.
Thank you, Fat Joe, and welcome to Run the Numbers, where I interview world-class CFOs, operators, and the investors who fund them on how to get the most out of your company's performance. This podcast is a playbook of sorts for ambitious people in the worlds of finance, strategy, and operations. Today, my guest is Guido Torrini, the CFO of OneTrust and former CFO of Celonis. He's had a major hand leading finance, strategy, and operations at two successful pre-IPO companies, in addition to B2C-focused leadership roles at Groupon and Gympass. We spent the hour talking about wartime versus peacetime leaders, why he doesn't believe in a firm budgeting process, and riding waves, both professionally and as a company. More specifically on this episode, we cover the qualities that differentiate wartime versus peacetime leaders and how wartime actually forges the best future leaders, regardless of environment, why he wants his finance teams to make the news, not just report it, why he's a big proponent of agile planning, drawing parallels to how engineering teams build products in sprints and adjust on the fly, how he sizes up controllable versus non-controllable spends, how he thinks about insulating his company from controllable versus non-controllable risks, and how he ties company priorities back to the budgeting process. Guido's energy and enthusiasm for the finance function was palpable. I wanted to run through a wall after talking to this guy. The way he runs his finance team feels more like an agile tech org than a rigid planning function. And it makes sense when you hear him talk about adjusting to economic and competitive dynamics on the fly and making sure each dollar the org spends is going to make the most impact. If you're the type of finance or strategy leader who wants to learn frameworks to help their org think and navigate outside the box to drive results, you won't want to miss this one. All this and much, much more after a short word from our sponsors. Quick math, the less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. That's the goal, isn't it? But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. Yesterday's price is not today's price. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform and one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required. Access from anywhere. You cut the cost of maintaining multiple systems because you've got one unified business management suite. You improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 companies, wow, that's a lot of customers, have already made the move. So do the math. See how you'll profit with NetSuite. And back by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. Head to netsuite.com/metrics. That is netsuite.com/metrics. Ooh, yeah, you know your boy loves some metrics. That's netsuite.com/metrics. Please do it, guys. I really need this. Cash is king. As the CFO of a SaaS company, I know firsthand how important it is to maintain a healthy AR balance. If you can't effectively manage cash, you can't service debt, make payroll, or invest in growing your business. That's why I'm so excited to partner with the sponsor of today's episode, Maxio, the leading billing and financial operations platform for B2B SaaS. Maxio helps top SaaS companies like Chili Piper, Crunchbase, and Stack Overflow get cash in the door faster by automating collections and dunning. Gone are the days of manually chasing down invoices. Join the 2,500 plus subscription businesses using Maxio, formerly SaaS Optics and Chargeify, to eliminate revenue leakage and streamline order to cash. It's never been easier to get paid. Visit maxio.com/run the numbers to supercharge your financial operations in 2024. Not only does requesting a demo using the Run the Numbers link help support this podcast, ya boy, you also receive a 10% discount on your first year with Maxio. Woo! That's maxio.com/run the numbers. That's maxio.com/run the numbers. Guido, welcome to the Run the Numbers podcast.
Oh, thank you for having me.
I want to start with an important topic in this day and age, and that's peacetime versus wartime leaders. What are the differences between a peacetime leader and a wartime leader? I know you've worked in multiple macro environments and different climates. What separates the two?
Yeah, look, I think more than anything, it's not so much it's the leader that thrive in peacetime or wartime, and then it kind of gets associated to be a wartime or a peacetime leader. And maybe the word are not even the most appropriate anymore, right? From when we started with this kind of categorization.
Yeah.
Wartime to me has to do more with the, being an existential threat or high stakes situation, right?
Yeah.
And those have happened all the time. Across, and it's not so much macro, it's a lot more micro, like the company you work with or a specific subset of the market. And it has to do with the fact that when you're in peacetime, you're like, it's not just about prosperity, or lack of threat. It's like you can really concentrate yourself. You can afford to concentrate yourself in long-term development of people, long-term development of the organization and the vision. And you have some advantages in that environment because then you kind of test the ability for the organization that you build to come up with better decision than you, right? And to ultimately, translate your first principles and your operating kind of like mentality and framework and philosophy and get the group of people to operate and decide better than you, right? When you are in wartime, it's the opposite. It's like you need to be extremely effective, extremely fast, and get accurate decision. You don't have the luxury of making a mistake, right? There is no learning from mistake. Most likely mistakes already happen and you gotta execute to save a situation. And a situation is truly existential for the company, right? When you talk about wartime is, I could be out of business in, 6 weeks or 3 months or whatever, right? And I think there's a lot of literature that is written around management that has a ton to do with peacetime, but there is no literature. You can't read it. You got to do it on the job and learning to be wartime. And so I think with that kind of explanation, I think for me, I definitely thrive in wartime just because I kind of relate the impact much faster, right? The iteration, the cycle are immediate. I think you got to feel like that you're getting something out of you're getting out of the situation positively, right? Most of the time, hopefully I've had that positive experience. And you learn to make decisions under time pressure, under limited information. It's just like you learn to carry a different weight and different responsibility, right?
Yeah.
It's kind of like it's unnatural for some people to be doing both well, right? I would say just like either you're a kind of person that is is more comfortable with the peacetime, with the kind of like buy-in type of activity of the decision making, or if you're more like hands-on and get it done, and you also get excited, if you wish, by the situation. Right?
Yeah.
It's very taxing, I think, to be constantly in wartime, honestly, just is not the best for your body, for your wellness. But I do think that it's just like certain type of people are more driven that way and find purpose, right? In that kind of fast iteration and resolutions and being confronted with really hard problems, right?
I had framed that up for you in terms of the macro, and you aptly reframed it in terms of the micro of what constitutes wartime. And I think that is so true. It reminds me, we spoke to Olivier Adler, who was the CFO at Shippo, but before that, he was the CFO at Erie, which made Wi-Fi devices. And basically, overnight, Google said, we're going to come into your space, and we're going to compete there. And he said that was wartime. It was a micro scenario in his competitive market where they thought they had this window to win, and then everything changes. It's like all hands on deck. We don't have any more bandwidth here for mistakes.
No, absolutely. I mean, there's a couple of people that you can read about this, right? I mean, of course, like this idea of wartime, peacetime that comes from Ben Horowitz, and but if you read the story of when he was at Loud Cloud and like what he did and how he split up that company from the software, and like this idea of like, if I got fired today, the person that come to the company tomorrow to do my job, what is it going to do? to turn this thing around. So like it's a very provocative way of thinking, and it forces you to some extreme action and extreme thinking when you're looking at the spectrum of possibilities and of options. So like, think about it that time. It's so funny when it's like, oh, my option was to go public to be funded. In their environment today, can you believe us something like that? No, I needed to go public. I needed to bring the company public to be funded. Otherwise,
I had to go public.
To avoid bankrupt, or like, I'm going to have to, and then it's like, I'm going to have to spin out basically my business and kind of try to survive on a spin-off on a new software business that I'm going to build and sell my existing kind of cloud hosting business to somebody else, right? And I have to do that process, and nobody needs to know, right? For a certain period of time, because we still have customers, we're still making revenue that way. But I need to find, 3 or 4 engineers that are going to rebuild this other thing the other way so that I can separate the two companies.
Yeah.
Like, those are the things that, like, that's what I mean by wartime. And like, wartime is like, when he made an example also, I think about, forgot what company was, that moved from memory to CPU, right? I think Intel, right? And then, there's plenty of those. But even like, I'm sure that a lot of people got into these wartime situations, even with the, 2022 kind of environment and rates and all of that. And all of a sudden people hitting a wall on funding valuation. And you find yourself like, oh, I'm burning 20 million a quarter and I have 40 million in the bank.
Yep.
So like, those are the things, and people get creative, and you find out more often than not that they solve it. And so like, what I think is great about it is that there is actually such a positive pressure and constraint that creates, solution and innovation out of that. And sometimes out of too much like peacetime and too much complacency, like you got to actually get stagnant on true innovation and the opportunity to capture something new. So, and I think that's why, technology shifts happen, and that's why there is disruption, and it's kind of a way for technology to reinvent itself, right?
Necessity is the mother of invention.
It is.
And I think that's what it brings about.
Absolutely.
One other thing on the wartime versus peacetime analogy is you had made the comment that peacetime focuses on development, right? You can sit back, you can work on developing people, you can go a bit slower. But it's kind of counterintuitive if you think about it, because if you're forced into a tough environment where you have to figure things out, like there's no safety net anymore. Those are actually the most formative experiences that people usually look back on and say, 100%. That's when I learned.
100%. I'm just saying that, so maybe to reflect further on that comment, what I meant was more like the idea, like the management theory of like, you create organizational harmony and development, and then for people kind of grow better and you get better, collegial decision making from it. But I think that there's got to be some element of wartime, even in a good peacetime environment, to create exactly what you talk about.
You get forced into roles that you're not ready for.
If you look back at every time you really learn something, there's many things. I've done most recently in my career experience, like, when everybody talk about the Silicon Valley Bank day, with that Friday that it went down, that Friday we closed $1 billion transaction. Can you imagine like funding it in that environment? So like, those are the kind of things that I'm like, well, I know how to do this now, right? Like, so I know how we got it done, right? We needed to get it done, and we figured out a way to get it done.
Yeah.
And so just one example, right? I can go back down into the memory line, and so many times you find those learnings, and you get things done that you believe are not possible. I think it really pushes the boundaries as well of what's possible. Not only you learn, but it pushes yourself.
I think it was Kobe Bryant who said that it's not truly a skill that you own until you perform it under pressure.
Yes. And well.
And well. Yeah. And well. Guido, I was excited to talk to you because you have such a cool mindset when it comes to being a leader. And one of the quotes you had was that you wanted your employees to make the news. It was something that Chad Gold from G2 and formerly of SalesLoft, the CFO there, said the same thing. When done right, what does that manifest itself in the business day to day, making the news?
Well, look, I think making the news is that idea, and it wasn't my idea, but I learned it myself from other leaders that taught me, and I've lived it myself firsthand. And, with no offense to the journalists, but this idea is like, are you a player or a journalist? Are you sitting and watching the game happen, and then at the end of the game, you talk about the scores, you make comments about who played well and who didn't? Or you're like, get your gear up, go into the field and actually play the game and score something or help somebody score some goals. And so I think that's kind of the mentality. And most often in finance teams, like especially historically, less so now, there's that tendency of like, explaining exactly, oh, this is exactly not working. This is not, get yourself into it, solve it, right? And I think it's a mindset that applies to that, but it also applies to the idea you think about. To me, P&L's financial statements are output results, right? You're so late when you look at that. Like it's done, right? The news is done and it's reported as well. And so it's this idea of like, you got to crawl your way up in the inputs. And I've learned that mostly in like marketplace environment or consumer environments are a lot more operationally intense and complex and have like, 75 million times more variable and more complexity operationally to unpack. But have the beauty of create this idea of what I call, revenue equation and profit equation. Like you're a great CFO if you can simply elaborate that for the company and allow people to understand these 5 inputs move everything. And if you move it from X to Y, you're going to be golden. Like financials are an output of a great business strategy and great execution.
Yeah.
And so if you want to be part of the game or part of the journey or whatever you want to call it, you want to have to play and move in the inputs. And that's kind of the mentality that you're trying to instill in the team. And I think like, our function and our leadership has gone a long way in this. Like, I don't think I'm the only one that talks in these terms. And when everybody talks about, what has evolved, why it's so better, I think, CFOs are such at the center of almost everything that goes on in the company. You have such a privilege access to information and pattern recognition that like you owe it to everybody else to share and explain what you see and make sure that you could be a true coordinator and quarterback with the execution. I think it's, I always tell my team, we have it in our vision or mission, whatever you want to call it, that we say, we want to be the architect of the company and the drummers of the business. Like you want to design it well, and then you want to be there and call the rhythm every day, every week, every month, right? The cadence is as important as the plan and as the design. And being able to do both well and connect the dots between the two and allowing people to understand it, that's the true value that you bring. And so it's really into all of that you become a player, right?
The cadence is just as important as the design. That's a clip. We're gonna steal that. And it makes so much sense. And what you'd said about crawling your way into the inputs, it strikes like a visceral chord with me because I'm a marketplace CFO. And day to day, I need to be in the pulse of the business. I need to be looking at the velocity of transactions. If I wait to report on that at the end of the month, like that's old news, man. Like that's been printed.
100%. And I mean, I had great leaders and great bosses when I migrated from like my hardware job into like marketplace and consumer, and like a lot of the people that I was working for were coming from Amazon to Groupon at the time. Right after the famous turning down the bid at $6 billion and then IPOing at 12. But yeah, and like that's how it was. If someone I worked very very closely with, it was the CMO, and it's like 80% of the people in my marketing team are engineers. Wow. It's like, that's how it works. Like build your organization around infrastructure, data infrastructure and instrumentation. And at the end of the day, in platform how it works. Like it's all about like traffic sources, paid efficiency, and at the transaction level, and unit economic transaction is everything. And so P&L comes many, many steps after unit economic transaction.
Yeah. Hey, thanks for listening. We'll be right back after a word from our sponsors. Okay, serious question for all my accounting pros here today. Are you doing what you were hired to do? What I mean is, do you have time to actually be a business partner, or are you buried in tedious manual tasks just to get your journal entries prepared every month? I know how that feels. Leapfin's here to help with that. Leapfin is accounting automation software that automatically prepares and posts reliable journal entries. And that's just the beginning. High-growth businesses like Reddit, Canva, and SeatGeek choose Leapfin to eliminate manual tasks, accelerate month-end close, and enable accounting leaders like you to provide faster insights that will help your company grow. If you're battling messy transaction data from Stripe, Adyen, Shopify, Apple Pay, and other PSPs, and then battling again to get it all into NetSuite, go to leapfin.com to watch their short product intro video. And if you like what you see, request a 15-minute conversation to learn how accounting automation can help you and your team. Check out leapfin.com today. That's leap like jump, fin like shark. I just made that up. I hope they're okay with it. Leapfin.com. Mercury knows your financial operations are complex. Founders and finance teams have to pull together different tools, reconcile transactions from different sources, and struggle to get accurate answers. With Mercury, you can simplify your operations with banking and software that power your critical financial workflows, all within the one thing every business needs, a bank account. And with new bill pay and accounting capabilities, you can pay bills faster, stay in control of company spend, and speed up reconciliation. Apply in minutes at Mercury.com and join over 200,000, ambitious startups that trust Mercury to provide the precision, control, and focus they need to transform their financial workflows so they can perform at their best. Mercury, the art of simplified finances. Mercury is a financial technology company, not a bank. Banking services provided by Choice Financial Group and Evolve Bank and Trust. Members FDIC. I'm getting good at that voice. The P&L is the output. I feel like the best financial analysts are the ones who are able to almost live their lives, to steal a line from Vin Diesel from Fast and Furious, a quarter mile at a time. They're in the results as they come out, and they're crawling their way up, like you said, into leading indicators in the business as to where they'll end up. I think like you should be able to, within like 10%, kind of have an idea of where you're going to end the period at any point within the month. And that's being like intimately familiar with the pulse of the business and how fast it's moving.
100%. And now, like when I kind of like get old, I got lazy. So software is much easier. It's probably the lowest complexity, in that respect. But it's also still like the clarity that you can get by explaining it. It's very, very powerful. Because at the end of the day, it goes back to the same thing. You need to move the inputs. There is nothing else. It's like, and I call it on purpose revenue equation because in the equation you have dependent and independent variables, right?
So can you break that down? What's a revenue equation? I love this.
It's this idea of like inputs and outputs, right? So you have dependent and independent variables, right? And you got to move the independent variable. And so you could think about like, in software, how ACV or ARR is built as a combination of factors, right? But then you go and you can always peel the onion one level up and then you get to the atomic element of growth, which is the rep.
Yeah.
Right. The rep is on ramp and is on productivity is the atomic unit of growth. And then you build your entire economic model from that. You need to build it 2 or 3 different times because you can't just get into the fallacy of one dimensionality. You can build a revenue equation thinking about logos and ASP, et cetera. It's always a P times Q equation, right? You got to identify the P's and the Q's and it gets to revenue. And then you can add more things to it. You get to cost. And you get to free cash flow, sort of, right? So you can simplify it enough for a company to understand. And then you say, this is why at a macro level, we look at these 5 KPIs.
Yeah.
Because we move this one from week to week, and each one has a different contribution to the result, right? I mean, every quarter at my company here, at OneTrust now, we do this session called Inside the Numbers, and we try to explain exactly those things. And in one of the sessions that I did, but we actually went and talked about 3 or 4 KPIs and like how much each KPI impacts your rule of 40. Is it moving 1% of growth? Is it moving 1% of free cash flow margin directly or indirectly, right? So that people kind of understand is like, one more rep is this, one more point of GRR gets to the bottom line here. And so it's helpful, right? It's helpful if you try to do it at the right level because it makes people understand the connection between whatever their initiative and the variable that they're trying to move makes it when it goes into the P&L and what it takes to be a world-class company or a world-class software company or in general, as an organization that develop results and it connects your ambition and aspiration. And then you almost have the entire chain between these are my strategic goals, this is my financial plan and how I allocate capital to my strategic goal, and then this is my operational cadence, right? And how I drive that day-to-day execution and make sure that my inputs are moving in the direction I want.
That's awesome. Maybe we'll shift actually to talk a bit about how you look at the business and some of the frameworks you use to control it.
Yeah.
And one of the frameworks you had sent over to me, it was V2MOM. And I read that really fast. And maybe it was because I was going for a run that day. I read it as VO2 max. I was curious if you were talking about the benefits of training at altitude here, Guido. But what is V2MOM?
So you say V2MOM, right? Which is
V2MOM. All right.
This is a framework from Salesforce, okay? And so I learned it because in my past company, I had the privilege of working with two super high-class ex-Salesforce executives. And it's something that actually, the founder and CEO use it almost from day one. And it's not complicated, and it drives at the same time alignment and prioritization for the company, right? And it's something that you use for kind of a year on an annualized basis, but you refresh it for a longer term. And it tells like, okay, this is kind of the vision and the theme of what we need to accomplish this year. These are the values that are going to hold us together as first principle in the way we're going to execute. And then these MOM are like method, obstacles, and measures. And then basically you outline stack rank in priority. That's the importance of alignment and prioritization. What are the business outcome you need to accomplish? What are the obstacle against this outcome that you kind of already perceive today, right? And you can anticipate. And what are the measurements that are going to tell you that you have accomplished those objectives, right? And it doesn't have to be complicated. It could be 4 or 5 pages and you're done. And it's in writing. You write it up in simplistic term, and then you connect those vision and principle and strategic goals to kind of business outcome that you expect. You quarterize them, and then you say, and this is going to be the measure that tells me that I've achieved that. And by the fact that they're stack ranked, then they help you in financial planning and capital allocation. Yeah. Right? And you need to do 1 at the expenses of 2, at the expense of 3, at the expense of 4, and so on. And normally you don't have more than, maybe 5 or 6 of them, because you got to prioritize, if everything is a priority, nothing is a priority. So It just helps you put it on a page. I mean, when I did this exercise the first time, then there was someone from, my FP&A guy from another company was like, oh, we do something similar. We call it plan on a page. Yep. But the principle is the same. It's like you can go around with that thing and everybody knows that those are the 5 things. Yeah. And if at a company somebody's doing something that is not moving the needle on these 5 things, they better not do it. Yeah. They better go talk to their manager, talk to their boss, and just change whatever they're doing to make sure that the company needs to align. That's the point of alignment and prioritization. The company needs to align to do that. And it's also something that you can iterate on, right? And that's why I like it to say a plan. And that's why I told you, we don't do budget, and I hate budgets, because you're not going to leave things there. It just needs to be a live animal, a live iterative plan where you understand, you learn, you correct. And the prioritization is what forces you to allocate the capital to place A versus place B versus place C, right? And that's the way we are capital efficient. Instead of adding and being in an and culture, in an and environment, where it's this doesn't work, but we'll keep doing it and we're going to do that, right? I think the reality is that you need so what I tell people is your first funding round is inside your current run rate OPEX. That's where you look first. You don't need to go spend more. First, you need to make sure, and it's your fiduciary responsibility. Your entire run rate OPEX is aligned to your strategic priority and is allocated to those priorities. Then you go get more if there is really something more to go get that it's important to accomplish in parallel and not in sequence. And then you need to get it done at the same time. Right. And that's why you go borrow from the future in terms of I'm going to burn. Right. So I think that's kind of the framework, one of the framework that I love the most, because it connects strategic planning to financial planning. Right. It forces capital allocation, because people talk about it like a fancy word, but it's what does actually mean is putting your money where your mouth is. That's what it means. Right. That's what capital allocation done right means. And making sure that there is a connection between how you want to invest the money, right? And what business outcome you want to accomplish. You want the capital to be associated with a business outcome.
Guido, I heard a quote yesterday. Strategy is outlining what you're not going to do.
Yes. I like that.
Hey, we can't leave the people hanging now. I got to go back to what you said. You said you don't do budgets?
Yeah. We don't do budgets. I hate, it's banned. The word budget is banned from my team.
Is that on a bumper sticker? Can we steal that? But how is that possible? You don't do budgets?
Well, I mean, you plan. This is my point. It's it's an attitude. It's a mentality. You have to plan. You can't do budget, and you can't plan forever, right? Yeah. To be effective, you got to do 3 things. You got to plan, you got to execute, and you got to hold people accountable to that execution, right? And planning needs to be the smallest part. And needs to be flexible enough, because it's the execution and the iteration. In the same way you do, people do and apply those principles to things like, product development.
Yeah.
Right. Why wouldn't you apply it to capital allocation?
Agile.
Yeah.
Is what you're saying.
That's what I'm saying. It's like there is a lot of opportunity to just by using that philosophy. I mean, you end up giving people envelopes, but those envelopes are not something like, oh, I have a backfill. No, you don't have a backfill. Like the money get constantly distributed, and as a group, we decide how it needs to be allocated. Of course, you don't have like 100% flexibility, right? You have payroll, and that's not easy to move. But if you have enough fungibility in your organization and enough, quality of talent to adjust, it's going to be very important. And then, in any company, probably 20 to 25% is non-payroll spend at least. Sometimes even 30%. And so that one is not a small portion that you actually have the flexibility to move over time as you learn. As you go through your plan and you go through your year, you learn.
Right.
The idea of a budget is something static. It's like the government, right? Oh, I got to spend it at the end of the year. Otherwise, they're not going to give it me next year. And I'm like, yeah, you got to earn it every month, right? And so together with that, you get into a plan where you're like, okay, I'm going to look at my progress in terms of my business outcome every quarter. Depending on what I'm doing well and what I'm not doing well, I'm going to reallocate some of that capital for the next quarter, right?
Yeah.
And sometimes it's like holding some of the decision and the investment in, the following quarter. And sometimes it's just changing those, right? Because nobody feels the rate fills the rack at the rate they need to fill it. And so there is always enough flexibility in the system to adjust. And when you are adjusting, 10 to 15% of your capital allocation, that's a lot. That's already a lot and can make you way more effective at achieving your outcomes. Because the reality is when you plan, you're making assumption about what you think is going to happen. And so if you stick to an annual assumption and you don't move things for a year, that's not a good recipe for success.
Well, let's make this more real for the listener. So you're in November, about to go into the new year. Your chief product officer says, Guido, I really need this software tool, full story. I think I'm going to buy it in Q3. Q3 shows up. Does your chief product officer have to come to you again and say, this is why I need it?
No. I don't think it's at that level. I think the point is more like you're planning in November. First of all, you don't plan P&L first. You plan like what you want to accomplish as a business, right?
Yeah.
And then you're going to start to put some of the investment and you're going to line up those investment and the revenue associated with it, right? And number one is like, okay, there's got to be revenue blanket to cover for everything. So the number one most important thing is like, you got to unlock based on the revenue result and on the business performance, right?
Unlock it.
Annual, I think I love a lot more of the quarterly toll gate process when it comes to that, right? That's the first thing. The second thing is that a lot of the business, going back to the revenue equation, is based on like ratios and assumptions, right? Assumption on productivity, assumption on return, on performance, etc. And so if those assumptions come short or come long, you're going to move it. Like, oh, this product line or this geography or this segment is doing better. You're going to put more there and less there. Like, so you have some high level plan when you say, hey, this year I'm going to add 100 reps, right? And at the beginning of the year, I think I'm going to add them that way. But then throughout the year, things happen. We're humans, like, leadership change, certain things go better, certain things go less. Then you have the ability to move whatever you do and whatever you're at. And so if you think about it, I'm talking about in software, right? And so the over 50% of the spend normally goes in S&M, right? So, and I'm not thinking about 50% of revenue, think about 50% of OpEx, right?
Yeah.
If you think about how you're moving over time, you have to follow the ACV, right? You have to follow where the actually business is pulling you and driving you. Like, it's more like over time, you're going to decide that allocation a little bit better. If you go to somebody and say like, oh, you can hire, 40 of the 100 reps in North America tomorrow and just go. And the guys front loads all they hire in the first quarter. And I'm like, and then it doesn't work, right? So that is the part where like you got to dilute it right over time and you got to have the flexibility to move it around. And with that, everything else moves around because like, the rep is the atomic unit of growth and then the rest of the circle moves around. The way you're allocating, the people around them, the BDRs and the SEs and the marketing spend, just all flows through that, right? So you have anchors that are appropriate and consistency, and you have principles and expectation about ramp, productivity, etc., ratio of people, cost to book overall between, the rep and everybody else that is non-quota carrier inside an S&M envelope and so on and so forth. And so you do it with that level of agility, right? In R&D is a little different, right? Because of course you got to think more longer term, and whatever you're investing in your building is not really what you're selling in the year, right? So that follows more of a 3-year plan structure, and it is always like the measurements are different, right? And you just have to go in terms of, I think, just to go in terms of macro category of affordability. But even there, you have to have leading indicator, and you have to understand, like, am I hitting what I need to hit in terms of intermediate milestones? Or are there things that I had this idea about what I wanted to build in the product, but the market is shifting at a different pace? Think about, like, if you get super stuck with budget, and then and then ChatGPT get released, and then what do you do? Like, you'd have to have the ability. And so, like, what I mean by that is not so much is the philosophy more so than anything else of, like, being able to be agile enough to make the changes you need to make, and have a framework and have a process where there is the opportunity for that to happen. So if by design you have a cadence and an operating structure in the company where those things get reviewed monthly and quarterly, and adjustment can be made because we can have the discussion, and the mentality is there to have that discussion, then is when you make progress. And so you don't have to confuse that those are discussion and changes that apply at the layer. There's a couple of, like feet below the top layer, which doesn't change, right? Which is your long-term direction, the vision, and the business outcome that you want, right?
Yeah.
If you want to double the company in 3 years, you're not going to 1 quarter after the other wake up. It's like, oh, I can double the company because, I only grew 30% instead of 33% this quarter. Like, no, those longer term paths still apply. The reality is that I'm trying to just say that the budget gives an impression of something static that makes you potentially make the wrong decision.
Yeah.
Think about if I tell you have $200K of software you can spend and 4 recs. And then you figure out that it's like, oh, I can do this with 1 rec, but $300K. And the rest of the company can bank and use it for something else. That's what I don't want a budget for, right? So that those decisions can be made. And it's a mentality where the entire executive team needs to buy in and needs to be comfortable operating at. And that works if there is perfect alignment of incentive as well, right?
And there is something freeing when you do distill it down to its core atomic units.
Yeah.
And like on the sales side, you said, Guido, the rep is the atomic unit. Then there are concentric circles around them, which forms a pod of other resources which you have to pay for. And then you have to go where the ACV pulls you, right? Like, and that's where the flexibility piece kicks in.
That's right. That's right.
That's good.
I think you summarized it in 10 seconds, and I was talking for 10 minutes. So
no, I have the easy job on this podcast. What I did want to go one layer deeper, though. It sounds like there is a controllable versus uncontrollable aspect to this as well.
Yeah, I mean, look, you have an existing payroll set, and there is a lot of foundational investment that stays. Like you have leases, right? you have a lot of stuff that is what it is. And so what I mean is like it's just like the word that I don't like. Even when you're participating in a sales cycle and you have to come up with like crazy way because the customer is like, oh, I have this budget for OpEx and this budget for CapEx, and I'm like. What do you want me to write in the order format? I'm still delivering you the same thing, right?
Yeah.
And so you kind of see it. I've been in so many situations where the customer is like, oh, I don't have budget to buy this product this quarter. But I'm like, let's sit down together. Isn't this going to make you go faster, towards your goal? And you see them like in these larger companies where they're so stuck into the structure that doesn't allow them to operate better and to deliver better result for the company.
Yeah.
You know what I mean? Like I was just recently there was a very large deal that, I have the OpEx approved for the deal, but not the CapEx approved. What are you talking about? Like, it's like that's the part that I'm trying to carry a flag for the rest of us. And I think there is an opportunity to just change a little bit the mindset and just go into do the right.
It is a mindset shift.
It's a mindset. It's not so much that we don't budget. It's just like it's the idea of like business outcome, planning process, capital allocation, and be as efficient as possible in repurposing. And realizing that when you're planning, you're making an assumption of how you're going to go do something. And while you're doing it, you might figure out that these are a better or different way to do it.
I also really like how you thought about the lead time associated with different things. Someone once said to me that the rep you hire today is the incremental ARR you can expect tomorrow. And on the flip side, the engineer you hire today builds the product you can sell next year.
That's right. Or 2 years from now, probably.
Yeah. And the rep, actually, with how long they take to ramp, it's probably the incremental ARR for next year. Because you can look at it like how many heads is a company adding, and you can kind of forecast what they think their revenue growth for the next year will be. That simply.
There's a 90% R square between AE growth and ACV growth at any software company. Just go do that math. Yeah, yes.
First principles. It's that simple.
2 year CAGR, 1 year CAGR, 2 year CAGR. This is from my Salesforce guys. They've done so much analysis and regression analysis on it. It's the same thing, when you think about people are stuck with other things. They're like historical, like CAC payback. I'm like, oh, if the payback is 9 months, it's better than 12 months. It's like, well, that's one factor. The other factor is the absolute dollar of the payback. You know what I mean? Do you want to get $300 back in 9 months, or $5,000 back in 12 months? So this is why a lot of these things in isolation can create damage, right?
Right.
And that's why it's important to try to connect this input KPI into the P&L and see what they do.
Right.
And that's why, for example, I'm a way bigger fan of this idea of cost to book and cost to serve, because those two costs represent the entire cost base in the P&L, and now it relates to revenue. And so I think that right now we're in a world where there are better and more sophisticated model to look at things, and we should embrace it. And that's why we're talking about at the beginning. I love what you do, because it forces you to be a perpetual student, and understanding how people solve problem in different ways, and pick and learn the best, and just then try it out and apply it at your own craft. And so you get to learn many, many things, I would say, if you continue to be curious and try to a little bit challenge.
Admittedly, though, a flaw that I do have is sometimes I will make it overly complicated. And that's a rub that I have with a lot of investor metrics, like LTV to CAC. If you take that in a bubble, okay, maybe it's good for a binary invest or don't invest decision. But if I'm a CFO who's trying to improve our outlook on the P&L for tomorrow, that's a pretty compound metric. I don't know who owns anything in that. So I love studying metrics. I'm a nerd, but I always do have to come back to maybe it is as simple as how many new reps am I hiring? Is that my growth rate for next year? I
mean, in a simple linear word, yes. Then you have non-linear growth levers, right? And you have partnership, you have channel, you have other things. But for forecasting linear growth, there is no better indicator.
Yeah. Yeah. And that was just an example.
Yeah, no, I agree. But this is how you need to boil it down to something more simplistic. Or other things that I think matters is think about the ratio of AE to non-AE heads, right? Because people think about them at the micro level. It's it's 3 reps per BDR and 2.5 SEs. Okay, then sum it up all together and see in your entire go-to-market organization how many people carry the bag and how many people don't carry the bag,
right? And
see what the ratio between the two is, and then look at your S&M and percent of revenue and ask yourself some questions. So there is always correlation. There is always ability to push this number down, or simple metric $1 of S&M for $1 of net new ARR, and
I want to shift gears a little bit and talk about riding waves, because you've operated in multiple economic environments and a few different tech waves. I want to talk about how you think about positioning your company to ride waves. How do you insulate your company from stuff you can versus can't control as a CFO?
Well, first of all, I would say it's easy to take the credit looking backwards, but I was never designed my career like that. I think it just happened. Maybe it happens because I try to focus on a different principle, which is it's first the asset, then your leadership, and then your job, right? And I've always tried to choose my career that way.
Yeah.
Because there is one concept that I always tell people, which is think about if we were in Egypt, 5,000 years ago or whatever. That was the Delta of the Nile. Everything was happening there. It was such a fertile territory. The smartest people from everywhere in the world were there. And so if you are there, if you are where the Delta of the Nile is, you're going to learn 3 times as fast, right? And there is a reason why that is a, very flourished environment. And so just get attracted and stay around this kind of environment is the rule number 1. I think, for growing and making your choices. And then is like you kind of choose your leader, and then you choose your craft, right? But I think especially early in your career, if you do it like that, I think you get just a disproportionate advantage, right? I mean, if in 2000 I work at Cisco System, it was the bellwether of technology. Like, there's definitely the kind of caliber of people, technologist, leader mentality that was there. It's imprinted in your early in your career. That's how you actually learn your best mental models, right? And then if you look throughout the career, you go from one thing to the other, to the other, to the other. And you always try to follow that thread, right? I think that's kind of like how I think about riding waves in general, right? Then when you're at the company, then it's like, okay, assuming you're already done a good job at picking the asset, right?
Yep.
Then it's really about, by definition, the asset is on a wave, right? Because like one of your number one criteria should be time and traction, right? When you look at, right? and so now it's just more about like, okay, get on the surfboard, surf the wave, don't fall down. It's not so much about how you catch the wave. You're already in a place where like the wave is big, right? And the wave is really like the market and the time you're in. And then like how well you do is really down to execution, right? And it's down to the leadership, and it's down to the other people that are around you, and it's down to the culture that is at the company, right? And so that's kind of like more how I think about it, because you're influencing it at a lower level because you have already made the biggest and most difficult decision, right?
That makes sense. And I want to go back to the career wave bit that you had there. I didn't expect that. And that was an amazing analogy. You've lived geographically in a lot of different places too. You've worked in Europe, you're in New York now. How do you think about where you live impacting your network and kind of what you work on? Do you think like geographical proximity plays a degree of success?
Yeah, look, I think if there is one thing about my career, I probably should have moved faster to the US. I've always worked for a US company, and like the first 12 years of my career, I worked outside of the US for a US company.
Got it.
And that, like, you understand, right? It's different, right? You're a little bit more isolated. You have somewhat more autonomy, but you're also not as close to the sun, right? And I think your opportunity, your career acceleration is just tremendously faster when you're closer to the sun. And that's especially through, 20 years ago, not so much now with the level of technology and flexibility that you have, right? Mm-hmm. But I think that the geographic aspect, I think it has more to do with the personal development, right? Okay. Because of the experiences that you make and just this idea of being out of your comfort zone, right? So I lived and worked in London and Amsterdam and Paris and Madrid. And I spent a ton of time when I was in Dell in emerging markets. I was covering Africa, Middle East, and Eastern Europe. Yeah. So, I would go away like 2 weeks at a time. I mean, at the time I had no kids. I go away 2 weeks at a time, and it's like, I'm 3 days in Nigeria and then 2 days in South Africa. And then you go try to close a deal with the distributor in Saudi. And it was just like, you get exposed even just to the reality of like, how people interact and talk, and how do you actually get a relationship built or a transaction. I remember when we opened in North Africa, Algeria, and we try to go to a distributor and establish a relationship and a credit line. And this person is like, okay, first you have to come to my daughter's birthday. We're going to have to socially and then we're going to talk about business if we kind of, get aligned in a different way. And so like, I think you just get so many experiences and so many opportunity to learn how different people interact that helps you to read the room or to understand a situation better or grow your ability to be effective in a situation. Yeah. Right. And then you learn languages, you learn many, many things. Right. So I think that's what I think is extremely valuable about it. And so like, I wouldn't trade it off because it was fantastic, wonderful years. But if I was just laser focused on a single dimension of like, career progression or whatnot, of course it would have been faster in some ways if I was in the US. And then I think the other dimensionality of the wave, I think it goes a little bit back to the wartime, peacetime, and also finding yourself in the right spot. I think for me, definitely working in an earlier stage private company, it just compounds. It's back to your point, is like, you're closer to the reality, to the impact, to making the decision, to feeling the weight and the importance of your decision that have on the business, on the company, and other people. And you just learn faster because the pace at which things happen and need to happen is faster. And so you're compressing time. It's like, it's like years versus dog years.
Yeah.
That's what it is.
I think I had a bit of this grass is always greener mentality because I was looking at your resume and I was a bit jealous. Like, because I always thought like, oh, I wish I kind of lived in Switzerland or in London when I worked for companies that had headquarters there. Because I always worked out of the US. But at the same time, maybe I took for granted that I was so close to the sun that I was working next to the people who were the sun, day to day. And that is valuable in a different way.
That's right. Look, and I think it's always the case. Like you're there, you want to go and do your expat in Europe, right? So there's a lot of like one American company that did that. And it's a paid forward mutual enrichment kind of situation. I mean, I definitely had my first career kind of light bulb was something like you, like my first manager when I was at Cisco came from the US. He was an expatriate for 2 years and he taught me so many things, and he taught me about looking at reality in a different way. And with him, I was going back to the US at the headquarters a few times. And then you start to say like, oh, wow, 1 week here, I can get things done like 2 months there. And so you start to realize the benefits of both sides. It goes back to that point. Being exposed to both reality makes you understand what's better about each one. There's not one that it's superior or no aspect to the other.
That's great.
You just have to be smart enough to take the best part of everything, right?
That's good stuff. Guido, what I'm going to do is take you into what we call our long ass lightning round.
Okay.
First question that I ask everybody is, what's an example of something you've screwed up on the job before?
We could talk about it forever. I think this is not a lightning round. We can talk about it probably 3 episodes and things that you screw up at a job. But most of the time it goes from a day-to-day wrong decision, on an approval or a transaction, which you always make a lot because you make a lot of decisions.
Yeah.
Down to how you operate or how you come across into a meeting or how you try to influence something. So I think ultimately, as executive, most of the things we do have to do with how we interact with others, right? And how we get better at that and how we kind of inspire and motivate them, right? And so I think you make mistake when you show up with baggage that is not the right one for the day and that kind of stuff. So I think that's very typical. I'm a very transparent person and I can't, it's very hard for me to filter it out. So I could talk forever about those. I think technically there's always a mistake you make, you overlook stuff, right? Or you're tired and you don't catch the things you need to catch. So it's not that I'm not offering you a specific one, but I just think that the reality is look, you're human. What you got to do, you got to find yourself into a spot where you have the right team, the right infrastructure, the right safety net.
Yeah.
So that you operate mostly well and mostly
more right than wrong. I got it wrong there.
More right than wrong. That's the secret. And also I think the other thing that probably historically might have happened, and I've not done that ever, is not making a decision. I think is the worst mistake.
No decision is a decision in a bad way.
Yeah. And undecisiveness is one of the worst, especially in an environment that is high pace and high stake, right? So whenever you try to think it too much, you're actually hurting.
There we go. Next one I got for you. If you could tell your younger self something knowing what you know today, what would you tell him?
Tell a lot of things. Be patient, be more patient.
I get that one a lot from highly successful, ambitious people, which I always find is interesting. I'm thinking through all the interviews we've done so far, and be patient seems to be the one that comes to the top the most.
Yeah, because you're ambitious, you're high speed, you're high clock, and you don't understand at some time you're worrying about stuff that is going to play out anyway.
Oh, okay.
Yeah, and I think it's very typical when you're at this level, you want to make sure all 7 things needs to go, and it's actually if those 4 go, the other 3 will come.
Yeah, the ship has already sailed in that aspect.
Yeah, there is a I don't know how to translate it well in English, but there is a very simple and beautiful way of saying, my wife is Spanish. And in Spain, you say that basically all the raw materials are going to come to the working site, right? So it's just let it a little bit of time happen. And there's going to be a natural convergence of things in the place where they need to be for you to do the work that you need to do.
That's good.
Yeah.
I love that one. I'm going to steal it. Okay, next one. Can you walk me through your finance software stack? What tools do you use today to get the job done?
So, I mean, I think I'm a big fan of simplicity here, and you need to think about, there are fundamentally, in my view, 3 core pillars about how you operate. And I actually ran the stack at this company. So like everybody in the IT world works in my team. For simplicity, right? You need to have an ERP kind of pillar, you need to have a CRM type pillar, and you need to have a data pillar, right? Those are the 3 foundational aspects. And so we are using Workday for both financials and HR and HCM. We're using Salesforce as the core CRM instance, and we're using Snowflake as our data warehouse. But of course, then there's a ton of tools and transformations and layers on top of it. But I think those are the 3 pieces that are foundational in my view. And then I think you got to think very modern about this, because historically, what people build their infrastructure, build a ton of complexity because all of their system were point to point, right, to each other. And I think the right way to be and to build agility is actually have everything to point into the lake, right? So that actually you make a lot of the transformation and the computation in the place that is designed for that in the modern world. And so you only feed, already manipulated or transformed data and set data models and schemas into those applications, right? Okay. So you bring things into Workday, you pull things in from CRM, from other satellite system, and you all compute it, and then you release it back out wherever they need to be released, right? So either for further computation, for processing, or for reporting and distribution and so forth. So I think those are kind of like the two major things. Then we can go nerd it out software line by software line. But I think like the principle, I think it's important around that.
What do you use for payments today?
For payments,
credit cards, AR, AP.
Oh, in the same way we don't do budgets, we don't do credit cards.
Oh, spicy one. I like that. Okay, interesting. And what about FP&A? Are you still in Excel?
Oh no. So we do Anaplan.
Nice.
We do Anaplan because we do it for more things than just that. We also do it for sales comp.
Awesome.
It is a bit of a platform for us, and we have shared data model there too.
Last one I got for you. What's the craziest thing you've seen someone try to expense in all your years?
Everything and the opposite of everything. I've seen from cat sitting.
Cat sitting?
Yeah.
That's a new one. Okay.
See? To the usual, 10 grand tickets for whatever sport event. I've seen. Oh, one of the best one was like a sponsorship for a gala for a foundation, like for a famous.
Yeah.
So yeah, I mean, it happens,
Yeah. Somebody's got to watch the cats.
Somebody's got to watch the cats. It's the nature of the business.
Guido, this has been a blast. I've learned so much personally from this. I appreciate you being generous with your time.
I had a lot of fun. And as I said, I really admire for what you do. And I've taken the time to do a lot of this. And I'm an avid consumer of all your other products. So
that means a lot. Thank you.
Keep up. Keep doing it. It's valuable for a lot of people, I'm sure. And it always makes you think. And and it's a great contribution. And it's a great way to pay for it.
And I got to meet you today, That's the benefit there.
Same thing.
There we go.
Okay, good stuff.
Run the Numbers is a mostly LLC production. Yelling an intro by Fat Joe. Artwork by some AI thingamajig. Podcast and video editing is done by Cleancast at cleancast.io. Nothing said on this podcast is intended to be business or investment advice. It's the sole opinion of me, a guy who feeds his dog too much ice cream and has a history of net operating losses, LOL. If you like this podcast, please hit subscribe. It would mean a lot to me. And also check out mostlymetrics.com. That's my newsletter where I explore business models and financial metrics. Thanks for riding with me. Share this with your friends. Peace.